Okay, good morning. How's everyone today? This is Danny with Prime Capital. I just wanted to start off by thanking everyone for attending, taking time out from your busy schedule. I also want to thank our marketing team, Chris and Vitaly, and as well as Jake, who's our acquisition director, who was able to come up with this deal that we have. So what we're going to do is we're going to have a presentation on the slides for a 25-unit apartment community. Starting off, we're going to tell you a little bit about the deal, our team, and then we'll tell you about the area, why we think this deal is a good deal, why we think we can hit our projections. And then at the end, we'll let you know how you can participate if you choose to do that. Okay, then we have, I want to start off with the legalities first. This is informational presentation, and this is not an offer to sell or participate. That is done through the private placement memorandum that we'll make available to you if you want to take that next step. Secondly, we have our projections. They are projections that we come up with based on the area, based on our team's feedback, based on what we're doing there in Tucson right now. Nothing's guaranteed, but we do our best to give the best educated projections that we have. Good, great. Okay, so here we are. 25-unit deal. Then we went to our disclaimer, our projections. Okay, a little bit about me. I am the principal of Prime Capital Investments. I've been doing this for about 20 years. Prime Capital right now has over 1,500 units in 6 different markets, including Tucson. I have a little bit of experience in the asset management, as I own also a property management company, a local one in California. So we're pretty well versed on how to do the administration and the running of the buildings. Also, I have a corporate finance degree from SC, so I'm a numbers guy. What I like to do, and also a licensed general contractor. So a little bit of experience in the construction field, which comes in handy as we do due diligence and inspections on these buildings. We can pinpoint pretty easy as far as what needs to be done and what the potential costs could be. I also want to introduce Jake, who's the acquisitions director, and he'll tell you a little bit about himself.
Hi, everyone. My name is Jake Rubenstein. I'm the acquisitions director here at Prime Capital Investments. I have going on 11 years of commercial real estate experience. Most of that was on the debt side, so reviewing and inspecting and underwriting all commercial real estate assets, from small multifamily apartments in LA to 300, 400 units out in Texas to hotels out in Waikiki Beach. And so really excited to bring you this opportunity. It's pretty exciting, and I'm looking forward to share it with you.
Thank you, Jake. Our management company that manages our deals out in Tucson right now is Shelton Residential. They currently have about 30,000 units under management in the Arizona area. They are currently merging with assets, and that's the reason why you see asset management on there. Asset management doesn't have a West Coast footprint, and that was one of the reasons why they decided to merge with Shelton. Asset management has about 70,000 units under management, so it's a quite a large firm doing property management back on the East Coast and Midwest as well. So together, collectively, merging together, they'll have 100,000 units under management. And then we have a regional manager from Shelton that actually grew up in Tucson and is super well versed in the Tucson market. So she's the one that handles our assets there. A little bit about the deal. This is a 25 unit deal built in 1958, all 2 bedrooms, 1 bath units. They are about 740 square feet. The unique part about this building is it's all garden style. All the units have at least 1 covered parking. And they also have backyards, which is kind of unique to an apartment. When you rent an apartment, usually you don't have an individual private backyard, but in this case, they do. Also, a little bit about the Tucson market. And these are recent numbers. Even in the pandemic, Tucson has been able to show rent growth in about the 6.4% year over year. This project has a projected IRR of 17.63%, which is pretty good for a competitive market nowadays, and that's because we're getting it at a good price. And minimum contribution as an investor would be $100,000. We're raising $800,000 in equity for this project. Now, project looks like the top photos right now. One of the things that we're going to do, it's currently branded as Country Club Apartments. And bottom picture shows you a typical rebranding. This is not what we're going to do, but typical what we're going to end up doing. We have our management company will help us put together rebranding materials, where we do a sign, where we do a new website for the project, and basically come up with a new apartment building there. Second one shows what the building looks like. Most of it right now, the bottom one does show a unit that was done by the current owners. So it kind of shows you a modern painting scheme, which is part of what we're going to do as far as going around painting the entire building. Top portion of the picture on the right shows the courtyard, what it currently looks like. And bottom picture shows you an example of what we can potentially do to improve the outside courtyard of the building. Next slide will show you what the building looks like right now. Built in 1958, it's got the original cabinets, never been upgraded. They've just gone in and paint and cleaned the carpets and whatnot. So they haven't spent a lot of money in trying to do any upgrades. And this is the reason why you see the rents being so low, somewhere around the 600 range. What we're gonna do is we're gonna go in there, make the units look like this. They've already done one, and this is actually a unit that's been turned by the current ownership. What they basically did was go in there, put all new cabinets in the kitchen, the wall between the kitchen and the living room, open it up to give a open floor plan. So you can see that on the upper right-hand picture. We'll also go through the bathrooms and the bedrooms. So we'll have a 2-tone color painting scheme. We'll have the gray plank flooring throughout the whole unit, basically. So no carpeting. So it's a total renovation, and that's what's going to allow us to go out to market with renovated units and be able to get top market rent on that. Okay, I already mentioned a little bit about the management team. They currently have about 1,000 units under management in the Tucson area, so they're well versed in that area. They currently manage 2 of our buildings there that we have there. The loan on this building doesn't have any cash flow, and it won't have any for most of the first year, due to the fact that we're going to be changing tenants out. And so there's currently 7 vacancies, so there's no cash flow from there. The rest of the units are getting about $650 a month off of them. So we had to get a bridge loan on this. Bridge loan terms are for 12 months at 8% interest only. We did get two extensions, two options to extend for 6 months each, just in case if we needed them. But we don't really plan on using them. We plan on being done prior to the 12 months. And our projected hold period on this target is 5 years. In our CapEx improvements, we are projecting to be done within 12 months on a conservative side, but we actually think we could pull this off between 6 to 9 months. Now, we have $550,000 that's going into CapEx from the inside of the units to the outside of the units. We're talking about roofing, painting. We have a blacktop parking lot that hasn't been maintained very well, so we're going to slurry coat and restripe the outside. We're going to build a gazebo type in the center of the courtyard so that tenants have a place where they can barbecue, and landscape the outside. And then once again, we're going to go through the inside of the units and do a total renovation. You can see here what we're going to do. Basically, light fixtures, all new cabinets, mirrors. We're going to replace the tubs, shower walls, floors, toilets. Install the low flush toilets, save on the utility bills there. New cabinets in the kitchen, new countertops, new appliances. Total about $14,000 per unit. One unit has been done, so we're going to actually redo 24, not 25. And now I'm going to hand it off to Jake, and he's going to tell you a little bit about the area, rent, and whatnot.
Great. So Tucson has been topping the rental charts for about the last year. It's still going very strong, and across our portfolio, we're still seeing being able to push increases right now, and that's backed up by a recent Yardi Matrix survey. Yardi is a major accounting software for apartments, and so they kind of get their information from aggregating, tens of thousands of units under their software, and so they're showing Tucson's growth at over 6.4% for October year over year. Last month they were actually at the top of the chart, and so we continue to see strength going forward. And the reason we see strength going forward is that the subject property is very, very centrally located. You are literally a 5-minute drive from Banner University Medical Center. It's a brand new building that they spent $300 million on. You're also 5 minutes away from the University of AZ, but we the tenants that we're anticipating will be kind of young professionals. And not, this is, not university driven. You're also 8 minutes away from Tucson Medical Center and 3 minutes away from a Whole Foods. So very, very good location to kind of attract that higher end demographic that we'll be seeking once we've turned the units. Recently, on our recent properties, on a recent acquisition back in February, we've actually been achieving 150 to 250 rent premiums on unit turns. And we're above our original pro forma that we had sketched out in February on that property. So it's just been a terrific market to be in. Even during COVID, Arizona's been much more business friendly and has opened, has been much more open than the Western states have. And our third party management has reported strong collections across our entire portfolio. And again, Tucson has been topping the rental charts even during this time. And of course, this has made the news too, but single family home remain very strong as well.
A little bit about the industry. We have good growth in the industry as far as job production. Here's a list of the employers that can support that, and we feel strong with the market because we see job growth. Part of job growth is also will also create housing shortages because people move to Tucson and Arizona, Phoenix, that whole area, looking for jobs since the companies move out there and it's less expensive to live out there. I want to kind of bring up the rent comparables. We have a couple units here that are already achieving right around the $1,000 range for the 2 bedrooms. We have one that's in from $925 to $1,000. We have the other smaller complex that's already hitting about $1,200 for those 2 units. The 2-bedroom units that they have. And this one compares to our other project that we have, which is also 2-bedroom units. There we're already achieving $1,000 per unit, and project is in a slightly inferior area. The current project here at Country Club is actually a better area, closer to the jobs and medical offices, restaurants, and whatnot. Okay, here's the deal overview. Purchase price for the deal is $1.6 million. We just got back the appraisal, and it was appraised at 1.74 going in. CapEx for the reposition is $550,000. We're getting on the bridge loan is going to do 75% of the purchase price, and they're going to do 100% financing on the CapEx, which will be taken out in draws as the work gets done. On our $800,000 raise, we have a down payment of $400,000. We're going to raise an extra $50,000 just to make up for the overages on any CapEx item that might happen. If you guys have any experience with construction, stuff happens sometimes. You open a wall and you got something hidden back there that you didn't allocate for. So you just want to play it safe, make sure we're well capitalized for the renovations. Acquisition loan guarantor, $100,000. When we do the refi on this deal, we could potentially do, we might have to do a full recourse loan, potentially with the local credit union. Reason for that is we're keeping an eye on our prepay penalty. If we get agency debt on it, sometimes they have yield maintenance or defeasance, and those prepays can get pretty pricey. And so we're keeping an eye on that so we can have flexibility on an exit on this deal. Closing costs at $108,000, and then interest reserves and insurance is $140,000 that we're going to raise. Being the fact that we're not anticipating cash flow to service the debt for the first 12 months on this deal, we got to have enough money to pay the interest to the lender during that time. And that's where we come up with a total of $800,000 raise. Here you can see next to that, you can see a graph of the returns. We're projecting 17.63% IRR, but we just wanted to illustrate what it would look like if we move up or down at $25 increments on the rent. You can see if we go down 25, it's a 15% IRR, but if we go up 25, 11.25 per unit, IRR jumps to 20%. Now here's our cash flow projections, simplified basically. Our full deck will have all the details, but here's where we're anticipating on first year cash flow rental income at $257,000. But by year 5, we're projecting to hit $365,000. We are figuring about an 8% vacancy factor, vacancy and concessions. For the income, we do have within that 1,100, we are billing RUBS, so we do have RUBS billed back, and also additional other income might be late fees, admin fees, and there is a laundry room on site which has collections as well, so that'll be part of the income. Total expenses will be pretty high on year 1 at 55% of income, but as the building gets stabilized after year 1, we'll be hitting 44% all the way through, pretty flat on that. You see our NOI jump from $108,000 year 1 to 193,000 year 5. But our biggest jump comes from year 1 to year 2 at 172,000. Debt service is included, and you'll see cash flow, how it all works out. Year 1 is negative, but year 2 forward, it definitely increases, and then you can see the cash on cash return there as that increases, as income increases as well. Then we have what does your investment look like? If you invest $100,000, you would expect over the 5-year period 109% return. That's over 2 times multiple. Cash on cash being 7.44% and an IRR of 17.63%. We like this project. We think we can produce those returns as long as the market remains constant and as long as Tucson keeps doing what it's doing, rents keep going up. Now, we do have a potential early exit on this project. We've talked to our brokers. We've looked at the comps, which we have illustrated here. One potential exit plan could be at the end of the 12 months or sooner when the building is fully stabilized. Instead of refinancing, we go out to market and we sell the building. So we wanted to illustrate what that looks like. We've talked to the brokers, and if we can achieve $1,100 a month in rents, they think they can get pretty confident between $130,000 to $140,000 a door for this building. Now, if you look at it, what the cost base is, we're picking it up at $64,000. We're putting in about $22,000 in per unit, including interior and exterior, and our cost basis is about $86,000. So you can see the spread between $86,000 to $130,000 to $140,000. It's a pretty good size spread, and that's why we're thinking that we could potentially sell it right at the end of 12 months. You can see on the comps that we have there, you got ranging from a high of 151,000 per unit to a low of 112,000 per unit. Some of these buildings didn't have full renovations. None of these have backyards, and these are multiple story buildings, whereas ours is single story, more attractive to have the garden style as well. So we're confident we can compete with these buildings as far as pricing is concerned. Now, what does that look like in dollar amounts? And here's where you can see it, the analysis, whether we get at the top 120,000 per unit, 130, 120, 130, and 140,000. You can see what the sales price looks like. We included sales cost, pay off the outstanding balance, and we can see what the total equity would be left. Prior to any other distributions, you guys get your capital back, which would be minus 800,000, capital transaction fee, and then we have the net proceeds from sale. And we can see what the limited partner split is there, from $199,000 at $120,000 a door, so as high as $530,000 at $140,000 a door. Now, what does that look like as an investment return? Yeah, here's where we have hypothetical IRR at 12 months sale. If it's 120 a door, it'd be a 24% return. If it's 130 a door, it's 45. If it's 140 a door, it's 66% return in 12 months. That's why we are like really excited about this deal, because potentially we can get 140,000 a door with that type of a return. Now, market's going up in Tucson. So if this is a forecast with today's market, if market continues to go up, it would put us in a better position, a more solid position to go out and do this and potentially get more than that. Sometimes that happens because 12 months in this type of an environment could make that much of a difference. You can also see what the equity multiple is on a 12-month basis. from 1.25 times to 1.66 times. Now, this is pretty quick within a 12-month period. Your next question might be, how do I participate? In simple steps, we have a link right now where it says invest now. If you click on that, it would take you to our website where logs you in. If you're a current investor, you would log into your investor portal. The deal is sitting there. If you haven't invested with us before, you can go in there, create a username and a password, and it'll get you into the deal. That's where all the deal docs sit. You'll be able to see them. You have the subscription agreement, the PPM operating agreement, and the accreditation form that you'll have to fill out. It's all done electronically. You follow the steps. Once you're done, then you go ahead and wire your funds, because you'll get wiring instructions through there, and then your investment sits there. What we'll do on our end, once all that's in, then you'll get a receipt, formal receipt emailed to you saying we got the forms, we got the wire, and we're ready to go. Now I'm going to switch to our Q&A. I'm going to go off of here so I can turn Jake's mic on so you can go through the Q&A list.
Okay, so the first question is, when's the last day to wire funds?
Okay, I'll take that one, Jake. We're gonna this deal is moving really fast. Lenders might be ready to close prior to the end of the month. So the 23rd is when we're gonna try to get everybody's funds in and be ready to close. Try to close before the end of the year. Right now, we're waiting for survey to go through the property title needs survey, and that's what basically we're waiting for right now to get that completely done.
And the next question is, can you tell us a little bit more about the potential for early exit? How early? Presentation says 5 years, but can it be faster, and why?
Okay, yes. All our forecasting is done in a 5-year hold. Because of the state of stabilizing the building within 12 months and having to do the refinance within 12 months, instead of refinancing, we could potentially sell it if we've achieved our rents at 1,100, which we think we will, and if we can go out to market, and if we can get between $130,000 to $140,000 per door. Naturally, we would aim for 140. Then at that point, we will end up selling it. So this could potentially be a sale within 12 months. The decision will be made to do it as long as we hit our rents at 1,100 and hit our sales price of 140,000. Then we'll sell it within 12 months.
And great. And the next question, which you already touched on, but was how long to get the asset stabilized? And maybe you can talk a little bit more too about how many units, a month.
Okay.
Planning the term.
Okay. To stabilize the asset, there's currently 7 units that are currently vacant. Those are the ones we would start on. We've talked to our contractors and our management team. They think they can turn the units about every 3 weeks. We're figuring on doing, and we're going to shoot to do 5 a month. But technically, we're going in there. We're going to do 7 the first month, come back, lease those up. During that time, we'll vacate 5 more units so that they're ready to move on to the next 5 and basically do a chain reaction that way. If we can do 5 units a month, we're done in 5 months. I'm figuring we can probably do between 6 to 9 months. We got to leave a little bit of wiggle room in case if something comes up, in case if you get rain, anything can slow it down a little bit. So we're figuring we could potentially do it between 6 to 9 months. If we're done in 9 months, we go out to market with the building at 9 months. If we're able to find a buyer at the time and go through escrow, we could potentially be in and out within the 12-month period.
Great. The next question is, do you own any other assets in Tucson or Arizona?
Yes, we have two other buildings, what, Jake, about 5 minutes away, 10 minutes away at most from this building.
Yep.
Yeah, so we know the market. Our regional manager knows the market really well. We know the deals and what people are getting in rents, and we know what we're getting in rents now. So that's why we feel comfortable that we can get what we get, and what we forecast at 1,100, just because we're getting that already.
Yeah, and as an aside too, on the 1,100 projected rent, just Tucson had its minimum wage go up last year, and they're at $12 an hour, which I believe is the same as San Diego. So it's very, very affordable, especially if you're splitting that with a roommate, to be able to, pay that rent. And it's, again, in a very, very trendy area with good employers, 5 minutes away.
Any other questions, Jake?
I think that's it.
Okay, great. Then I want to thank everyone for attending. If you have any questions, you can reach out directly to me. Email me, call me, whatever you need, and then we'll take it from there. Like I said, we're going to try to close this project prior to the end of the year, and then we can get it done. We'll go right to work on it and try to get this project done. Thank you so much.